Good afternoon, everybody. Welcome to Trader Merlin Show. I think my levels have been pretty hot lately. Let me dial this down just a hair here. Hopefully that sounds a little better. Happy post-Thanksgiving. Hope you all survived your tryptophan hangovers. Happy Monday. And boy, was that some great trading on Friday. It's funny because I normally don't trade on the half days, but I just looked at how bad those markets were down, and I'm like, I have to sell some puts. So I'll talk to you about that one a little bit later on, some of the trades we made. I'll also go through kind of the broad markets here at the end of this segment, because I don't want to be accused of doing clickbait, which means getting everyone to click on the show links just for a specific topic that I never get to. So I will get to the show right after I give a nice shout out to everybody. Hello, Les, Skilled Stocksman. I'll try to get to your question, Les. I just saw it come through. David, good to have you with us again, and thank you so much. I did try out the software. David bought me a piece of software so I can share my cell phone screen or any screen. It is great quality too, so I'm looking forward to that in the CIL tomorrow. We'll debut it, so thank you so much for that. Eric, Alex, good to have you as well. Margaret, I don't have any pictures of my Thanksgiving turkey. I'm not a big picture kind of social media person, in case you guys haven't figured that out, but I might have a few lying around. It was a nice smoke. We smoked the turkey, which always happens when I smoke the turkey. The white meat gets actually too dry, and the dark meat is unbelievable. And when I roast them in the oven, it's the other way around. I don't get it. Kind of a strange situation. But I'll see if I can find some pictures. Hello, Siraj. We got Thomasina. Yes, happy Hanukkah to all those out there that are practicing. We've got Giselle as well. Tom, Gallo P, Gary. Good to see everybody. And Lisa as well. So, and Katut, welcome to New York City. All right, here's what the topic was. And it actually was from two different questions. And Chris, of course. High five, Chris. 327. I'm sure you need to upgrade that, Chris, to 454. Don't we like big blocks? Today's show there were two questions that came in. One came in on the weekend and one came in this morning dealing with specific aspects that I thought, I'm just going to do kind of an overall thing on how to succeed. Now, what's great about this is, and I love this is my own show. This show has nothing to do with any other school or organization, so I can say whatever the hell I want to say. So, there's certain words that can't be said, like success, like freedom, and certain things with schools because of regulatory requirements. However, I can very easily call this show How to Succeed at Trading. Heck, I may as well call it How to Get Filthy Friggin' Rich in the Financial Markets. It all boils down to pretty much the same thing, right? It's all about, in my opinion, four kind of key components. And I think that what I'm hoping we achieve from today is it might calm some problems, some psychological issues people have with regards to trading. It may cause some of you to refocus and look at what you're doing as far as your process goes. Others of you may look at this and go, well, I'm not trading, but you know what? In my mind, these are kind of steps to succeed at life, period, regardless of what profession you do, etc. So I thought that might be kind of fun today. Let's do it. A Vega bomb is not a good thing, Alan. Actually, if you go to Trader Merlin's archives and you just type in Vega bomb, there's a great session on the Vega bomb we did with Corey Lane. It's good. It's a really good one. It really explains it in detail, and he does it way better than I do. Okay, let's start things off. So I'm going to go through four things. I'm a minimalist at times. I like to keep things as simple as possible. Hello, Jimmy T. I sat today and I was like, okay, how many different pieces do I think, when I look at the spectrum of what it takes to be successful in financial markets or really anything, what can I boil it down to? And I had 12 things written down and I condensed them down to four. They're power packed. So I'm going to start things off with the first one, which is pretty simple. And that, of course, is education. I think that you have to, yes, Lisa, I can actually see if I can find the video for you guys. But let me get through this, and I'll see if I can find the Vega Bomb episode we did with Corey Lane. It's on my YouTube channel, so if you go to YouTube, Trader Merlin, and then just type in Vega Bomb, it should pop up there. So I put success is number one is education. And I think that that's critical regardless of what profession you get into. I think that we can fall into the trap of being permanently locked in education, and of course you become an academic and you get tenured and you work at a university for the rest of your life and don't make a lot of money. That's where education, I think, gets too far to one side. So with regards to education, I think it's important you understand the mechanics of the machine that you're getting involved with. You know, Chris, who's here, you guys see Chris 327, Chris Collins 327 in our chat. He's a mechanic, right? He runs a repair shop. been a car guy forever. Okay, I'll see if I can find it for you, Alan. If you were to ask him, hey, what does this part of the engine do? Or how does this impact this? What does the carburetor do? Well, he would be able to tell you not only what the carburetor does, but how it feeds each step of the process of the engine. And the reason that's important is because if you bring your car to a mechanic and they don't understand what the carburetor does, then how do you know they can fix your problem, right? It's understanding that a car engine is the summation of hundreds of different parts. And if we don't understand one piece of it, we could potentially have a systemic failure and be unable to fix it. So that to me is why education is so important. And I think what happens is a lot of people hurt themselves by uneducation. So here's an example. So let's say, for example, most people get started with equities, right? They're looking at the stock market. I want to trade stocks. Okay, great. Well, they pigeonhole themselves in this little niche and they say, well, I'm going to trade stocks. I'm going to buy some Tesla or Apple shares. But what they don't realize is that the equity markets are tiny. They pale in comparison to some other asset classes. So if we take a step back and look at maybe the Forex markets, all right, the Forex markets, which is currencies, dollar, the euro, the yen, the pound, etc., those are much more powerful forces that steer global markets. So obviously from an education perspective, it's important for us to know equities, but boy, I certainly want to understand those relationships and how Forex can move because, right now, if we go look at the equity markets, we've been talking about that dollar index. Well, it was up again today. Had a little dip on Friday, but this trend right here tells you we're going to have problems in our equity markets the higher the dollar gets. Well, if you didn't know that, this is steering the market, right? This is steering the market. The market is not steering the dollar is steering the market. So back to my illustration here, you are much better off knowing those relationships. I know a lot of you guys understand this, but some may not. But there's so many more components to it. For example, I can now look at the bond market, which is way bigger than the equity markets around the world. That acts as a force. And if we can see certain things happening with the bond yields, then that could impact a lot of other kind of domino effect parts. And if we look here, we can go out and check out our bond yields. Right here. So here's your, not too much is happening with regards to the 30-year. Right, you can see it really feels like it's just traversing sideways. The 10-year looks like it's getting a little bit stronger. We still are forming this pattern here. I love it. This is an ascending triangle, which really does speak to the potential upside move here in that dollar index. And again, if we see bond yields spike, there is a cascade of relationships that happens in these markets. So, of course, that's bonds going to impact the equity markets. Heck, they could even impact the Forex markets, depending on what those bond yields are. And how does that happen, for example? Well, let's say, right now there's not much yield in the US dollar, so it doesn't really benefit financial firms to hold US dollars because they're not getting a carry trade. A carry trade is the interest that's earned on that. So if we're at, 25 basis points right now in the US dollar, that's 0.25%. There's not much meat on that bone. But if all of a sudden Jerome Powell and the Fed decided to raise rates next quarter, right? Q1 of 2022, maybe Q2, they raise. Well, now it'll go from 25 basis points to 50 basis points or more. So now it's more attractive for other countries or central banks or whatever to hold US dollars because they earn more. What that does is that now drives up the dollar even more, and we could start to see even more systemic problems. So just one small little example of how this machine is tied together. Then you add in things like, look at the futures markets, right? Clearly the futures markets are an influence on the equities because the futures are inherently, by definition, a product that is anticipating the price in the future. So, it's almost a forecasting tool. Granted, it's wrong a lot, but people are using futures markets as a guide. Then you add on other things like the commodities markets. Now, you could make the argument that commodities are impacting the Forex markets and then impacting the futures markets like this. They all starts to tie together. And now, if you look at real estate, obviously, real estate can impact the I agree with Big Eb. I think rate increase for sure in the first half. I think Q1 might actually be a little bit aggressive, but second quarter for sure. So you look at real estate. Well, there's a lot of stocks out there that are real estate based. So if I can get a pulse and a trend on real estate, I might be able to more accurately time my entries or get better trade feel on those individual equities. And of course, bond market does what? Well, that impacts real estate. Then you look at all the other relationships like Forex to futures. Then all of a sudden you have this new entrant out there, which is cryptocurrencies, which, I'll be honest, is impacting or impacted by every single one of these, right? There's now digital decentralized marketplaces for me to trade commodities, currencies, futures, bonds, real estate, every equity in the world, plus all the different cryptocurrency companies. So, this to me is important, and I tried to create a graphic that just really tied together why it's so important. Let's see, down here says, if education is an important, essential factor in determining your success, how do you determine which education source to choose from? Yeah, that's a great point out there. Obviously, you guys know that I would say, as far as educators go, you should probably not use the man who shall not be named out of Chicago. You should stay away from that one. But there's a lot of good people out there, and I think when you look at education, this is one of the reasons I'm still with OTA, is I think their approach is, let's talk about the mechanics first, right? Let's look at the big picture and see how everything works together. And what most people want is they just want the strategy. Show me the tactic that's going to make me a ton of money. Be honest, I don't think that strategy per se exists. It's a culmination of many different factors. So it's not like, hey, I'm using strategy A or I'm going to Trader's Army, or I'm using Online Trading Academy, or you name the firm. It's more important how you apply the strategy and the rules around it, which I'm going to get to in just a second. So, Delphine, it's a great question. How do you know? I think you go by, number one, reputation, but the sad part is you look at something like Online Trading Academy, and because of what happened, I personally think the reputation has been wrongfully tarnished. I still think it's the best school out there. Granted, they're expensive, but, in my mind, you get what you pay for. So I would go look at the individual reviews. Now, of course, there's always people that are going to slam every other company. That's just the nature of the beast, right? I've seen personally where people will actually hire or tell their friends, hey, go out and slam this company because they're my competition. Dig down deep and find people who, on both sides of the aisle, right? Looking at Yelp reviews is a torture, because a lot of times what's happening now is people will put a horrible review of a restaurant on Yelp so that the restaurant owner contacts them and then will actually pay them to take it down. Give them lifetime of food, or, a year for free food at the restaurant. So be careful with those reviews. A lot of the time, the negative ones, it's because it's a game now where people will literally pay you to take those reviews down, and that's a job for some people. So be careful with the negative ones. Look through and see what the positive ones are. What I'm looking for, if I was to be pursuing a new school now, would be, how do they support me? Do I have somebody I can work with, right? Do they answer my questions? Am I learning about the markets? I think would be a very, big factor. Level of experience. Are they showing you theoretical buys and sells? As someone out in Chicago, that's all they do. You can go to his YouTube channel and Twitter feed. It's like, hey, here's a trade, here's a trade, here's a trade. Okay, well, you picked 100 levels yesterday, and you're showing me the 2 that worked today. The other 98 failed. And you're telling me that you took all those trades. That means you're a net loser, right? I want to see people making trades with real money if they can, but some places aren't allowed to do that because of the difference in, the distraction that happens to the students. I prefer to do live trades if I can. One thing that I think Online Trading Academy did great early on was in the stock class, you could trade live with real money, and it wasn't your money. It was the school's money. So all of a sudden, you have some skin in the game. You get that emotional feel and things like that. To me, it is very important. So look at reviews. Call them up, right? Call them up and talk to them and say, hey, what am I going to get from your program? For me, support is critical. Number 2 would be community is very important as well, right? Well, Gallo, I can't say you got it covered here for free. I'm not going in depth on the strategies or anything like that, but obviously I don't want to hinder my employer by any means. However, I personally think community is critical. You want to make sure there is a community around you, whether it's you take physical classes. So, for example, Tom is here with us. I know Tom has gone to the physical center multiple times, and I'm making an assumption here, Tom. You can correct me if I'm wrong, but my assumption is in that class, you're kind of saying, I resonate with this person here. There's another student that I really kind of got along with. There's other students you won't get along with. That's just life. But when you find those people you get along with, you're like, hey, what's your number? Let's chat and trade, or maybe go out and have a coffee and talk about markets, that type of thing. To me, that's important, as opposed to some of these other schools where there is no interest in you as a person. You are simply a commodity to them to make earnings. And I think that the community aspect to me is a very critical one. Especially, I think Lisa's here. I would not be successful if it wasn't not for OTA Mastermind community. Totally agree. It's that community aspect, right? It's knowing that there's other people there to help you, to share their successes, to share their failures, and you get better from that. One of the things that I try to bring to this venue here is I've made every mistake, and I can say this 100% certainty. I have made every mistake that every single one of you has ever made or will make in the future. I've done this long enough where I know you guys could tell me a mistake and I'm like, oh yeah, I did that this time. I've done it a few times, right? So, for me, it's giving back a little bit because there's not a monetary reward for that. I mean, you guys know I do the show for free because I just really enjoy doing it. But it's nice to know down the road that our stories, and Larry Jacobson and Todd Davis of Online Trading Academy are awesome for this as well, is they're always giving their own personal stories and saying, here's what I do and here's how that works for me. Not that it's right for you, but I want you to see what I'm doing. And I think that's a powerful one as well. Yeah. It's funny. I actually, I was way too arrogant early on when I started trading. So unfortunately, I didn't maintain those relationships, although I'm not a very good networker either, but all right, so let me continue down this list. Let's see. Yep, exactly. And why we try to pay it forward as well. Because, hey, you know what? And I'll tell you, for those of you who are a part of a community, don't be quiet. Don't sit there and just try to feed off of everybody else. You bring something to the table. Whether you think you do or not, you bring something to the table. And the more that you teach, the more that you interact, the more that you engage, the more you start to develop your skill set, you start to develop your rules, you start to develop better risk management. It's awesome. So I highly encourage you to get involved. Start off slow, but be a part of the conversation, interact, and that will make you a better trader as well. So we got the education side. That's number one. I didn't think I'd go for 17 minutes on that one. But number two, most people do not talk about this. And I think this is absolutely critical. And the reason I put this on here, and it's knowledge of self for those who might be listening to the podcast. So we have number one is education. Number two is knowledge of self. Now, what on earth do you mean by knowledge of self? Well, I think that there's a few questions that we need to ask ourselves. And some of you might not know the answer to this. To me, it's very important. Now, number one, what are your strengths? Now this, I'll be honest, I don't think knowing what your strengths are or what make you a successful trader, but it's good to know, right? Because it's something that you know works and you can build on that. But that's not the problem, I feel personally. And I'd love discussion here is if you know you're great at X, Y, and Z, then you continue to do X, Y, and Z and you hope to get better. But the amount of improvement on something that you're already good at is not as significant as the amount of improvement on something that you're bad at. So if you can fix a weakness and turn it into a strength, the net reward for you and your style and your strategy or whatever profession you're in, the net benefit to you is significantly higher, monstrous gains. So for me, and I would recommend it for all of you, have an introspective moment where you sit down with a piece of paper and you go, okay, what am I good at? I'm good at this, and what am I bad at? And now your focus for the next 6 months, a year in your trading should be, if I made a list of 4 things that I'm bad at, then I need to go back through and focus on those 4 things. And if I can remove one of those, I now have an exponential gain in my probability of success because I'm taking a weakness, converting it to a strength. And when you start to remove all those weaknesses, and you'll never remove them all, let's be honest, you are absolutely going to have weaknesses that persist forever. And there's certain things that I have that they still lurk in the shadows every now and again, but I've fixed most of my weaknesses. Early on, I had a whole litany of them. I mean, my biggest one was stubbornness. I was impatient, arrogance, I would say, with regards to thinking I was better than others. And boy, if you have those 3 weaknesses in trading, you're going to get your ass handed to you on a regular basis like I did early on. So what are your strengths? What are your weaknesses? Those are really important. Next, you have, how do you deal with stress? You will find, and everyone here has probably encountered that, unless you haven't traded yet, Well, you find yourself in a situation where you're so stressful, it starts to change who you are. You act different, you're sweaty palms, and you're irritable, and you just don't function normal. You're going to have to deal with that because that type of stuff comes back and bites you in the butt big time in trading. So how do you deal with stress? And if you realize that you don't deal with stress effectively, then, maybe you look at somebody like a Dr. Woody Johnson, right? And I'm just throwing it out there because I've worked with Dr. Woody, and he's just a great guy. I think he helps reframe people's mindsets. But we have to understand we're all going to lose. That's going to bring on some stress. How do we deal with it? If we build a process around our stress, then we can manage it and control it, right? Whether that's meditation or mindfulness or whatever that tactic may be. To me, that's very important, saying how do we deal with the stress? Because I'll tell you what, you guys know this vitiligo that I have. I don't know if you can see it very good. I have vitiligo as a result of stress in trading. Happened in 2000. Yeah. If I ever finish the damn book, the full story will be in there. All right. Next on my list of knowledge of self is how do you deal with these three things? Fear, greed, and most importantly, losses. A lot of people don't consider the fear and greed aspect. They don't even, it's almost a subconscious element that they're dealing with, right? So you're making a trade, you got a nice winner on, and you just start piling in. You're being greedy. Now, I'm okay with being greedy as long as it's calculated greed or calculated fear, meaning you're maybe buying some more or something's going against you. Those two factors to me are very important, but a lot of people overlook that. And I think the more that you address these pieces, which are psychological, but I've seen over the years statistics that say most traders, and we're talking people who have made hundreds of millions, like all these Chicago, Richard Dennis, Bill Eckhart, they say that trading is anywhere between 75 and 100% psychology. It's not analytics, which was surprising because I felt that there was some secret sauce, some secret formula, some red light, green light, magic pill software you can buy and you just get rich. No. It's psychology. It's how you deal with all these factors, how you deal with yourself. That's why I put knowledge of self at the top of the list. So that was number 2 for me, knowledge of self. And I think that, most people don't take the time to evaluate it. I know, Big Eb. I know. I should. I don't know. I really should. All right. So I'm on 2. Let's get through these, then maybe we can have more of an open discussion. Number 3 is, and I think for many people, probably a surprise that it's this low on the list. It's the plan, right? So first off, number 1, educate yourself about whatever it is you want to do. You want to be a DJ? Well, educate yourself on how to be a DJ. Know your strengths and weaknesses, and then have a plan on how you're going to be a DJ. You want to be an engineer? Same thing. Get educated. Understand your strengths and weaknesses. Build on your strengths. Fix your weaknesses, and you'll go farther. Plan is a challenging one here. The plan I broke into 2 different parts. Number 1 is the business plan, and number 2 will be the trade plan. And I think I've mentioned this before, but the business plan should just outline very high-level things like, why are you doing this? Why ever you make it part of your 30-day challenge? I need to bring that back, Tomasina. I'm going to probably bring that back for the month of December because I got to start doing push-ups again. I have not done any exercising, and it is noticeable. And I got to get in shape, man. Got to be healthy. So, why are you trading? And I think this is a stupid one for most people. They go, "Oh, I'm just trading to make money." Okay, take the money side out. We all are trading to make money. Period. No one's here to lose money, right? So if we take that as a given, then you go down the list and you say, okay, well, why am I trading? Why is this a profession, a career, a hobby, whatever you want to label it? Why are you into it? And some people, it's to give back. I actually built the trading plan class for Online Trading Academy back in 2005. It's been modified like 4 or 5 times. I think Larry just redid a version of the trade plan class, which is great because it really does put a lot of these factors down on paper and start to build structure. But, one of mine, why am I trading? In my trading plan, under why am I trading? And again, this is all written down in a document. It's a 43-page document that I have that is my business plan, my trading plan, and all my rules and everything. And I wrote in there, why am I trading? Because life is short and we are all going to die. It's the only thing that I can guarantee everybody in this room. And if I know I'm going to die at some point, when that end date comes, we'll just let nature take its course. Good news, knock on wood, it wasn't COVID. You can have all the money in the world. You can't take it with you. Go ahead and buy yourself a gold coffin. Someone's going to dig it up. What they can't take away from your experiences. So I think you really need to go out there and experience life and travel and meet people and do things. Obviously I have a little mental break a few years back, so I have a hard time in claustrophobic situations. So I don't scuba dive anymore. You won't catch me spelunking or maybe even skydiving. But, there's a bunch of bucket list items that I would like to continue to do, and trading helps to support that. Now, one thing that might be different for me versus what a lot of others are doing, I don't touch my trading profits. I know it's weird. I leave everything in accounts. I do not pull it out to pay for things. So what I do is I let everything compound. Just grow and grow and grow and grow and grow, because I've managed my income check appropriately so that I'd never need to tap those funds. Obviously, I have a great safety net here financially if I need to, but I'm trying to just live within my means. I don't live extravagant. I don't do crazy things. But my trading plan was I want to take a 2-week vacation to some place that I've never been to before. Now, the past couple of years, that has not come to fruition, but I used to travel around the world and just experience cultures and life, enlighten myself by living on this great planet while we can, because I doubt I'll be able to go to Mars. I have a handwritten trading plan, overcome most of my emotional trade mistakes, Right, Big Ed. You'll always have some. It's like saying you're the perfect trader. You will never be the perfect trader, ever. You can be good, you can be great, but you can always get better, you can always fix things. So let's always strive to be better. All right, so why are you trading is one. Number 2 on here is what are your goals? And again, my main one was I want to travel somewhere I've never been to every year for 2 weeks. And, that's a very simple goal. But your goal may be to give back to your church. Your goal may be to, buy a new home with your trading. Your goal may be to get a 25% compounded rate of return per year, or 30%, whatever the case may be. Write it down. Because when you write down your goals, it's easier to measure if you've achieved them or not. If you just have them in your head, it's like, oh, well, that one didn't really count. Put them on paper. All right. Yes, CG, do it, man. And I'm telling you, if you're trading, traveling is one of the best things you can do. Because you can, as long as you have an internet connection, you can trade from anywhere in the world. And if you're too nervous to be a day trader, I get it. But could you open up an account at a brokerage firm that allows you to do OCO or bracket orders, right? Where you put in your entry, your stop loss, and your price targets. You check on them once a week, once every couple of days, and you just go backpacking through the Himalayas. You go, sit on beaches in Thailand, or go, take some Iditarod sled dog mush pack through the Canadian Northern Territories. You can do all of that. And if you do it with bracket orders, you know your risk, your entries, your stop loss, your price target. So how dangerous is it to you? It's as dangerous as you let it be, right? It's how you set up your trade. So CG, do it. A lot of times we get stuck in this trap of, I was going to say it's the American trap, but it's really not. It's every culture's trap, which is you got to work. You work hard. You got to put in, 40 years of labor, and then you got to buy a house, and then you got to buy cars, and you got to buy all this stuff. Well, ultimately we get so much accumulated, you can't leave. You're tethered to it. A few years back, this is probably 6-7 years ago, I actually thought about selling all my assets and just backpacking around the world, having no roots and just traveling. But that's a little too much for me. But I why not? If I was in my 30s, I would probably go back and do that. All right, number 3, what's your action plan? And the only reason I put an action plan is, in a business plan, you say, here's what I'm trying to achieve, here's how I'm going to get there, and then when I get there, what do I do, right? How do I improve my business even more? And again, I'm using business from the trading reference here because you have to treat, at least I treat it like it's a business. And as you progress and you get better, your action plan will help you identify, are you meeting your goals? How do we start to improve and get better and grow, right? So for example, if I start off in my trading plan says my action plan is I'm going to trade whatever, a $50,000 account, and once I get a 50% rate of return, I will now increase my share size by 20%. And I'm just making up a simple thing. So once you get to that, if you ever get to that level, you reevaluate your trading plan. You can start to adjust your business plan, say, okay, now that I know what it takes and how to achieve these goals, I'll modify those and raise the bar, right? It's constantly about raising the bar. And I think that leads us to the second part of plan, which is arguably the most important, which is your trade plan. Now, this is where your personalities will be reflected. And again, trade plan Includes things like your trading style, right? How much you're going to trade, what you're going to trade, all of that stuff. And I label that kind of as the trading strategy. So, I'm a supply and demand person. I use supply and demand, but I also love technical side of things. I love looking at price patterns. I love looking at candlestick formations. That type of stuff is what I think has really helped me. For some of you, that may not work. And you're just going to go, I don't like that. I'd rather look at fundamentals. Cool. I can't tell anybody that their trading style is trash if it's working, right? If your trading strategy is working, then what? If you're using tea leaves and star constellations to make your forecasts in the markets, and you're working, it's working. Okay, well, let's write that down and figure out how we can make it better. Whatever strategy it is, you're always writing it down so it can better. So when I say strategy, I'm talking about how you define what to buy, when to buy, how to buy, and who, what, where, why, and when of buying, really. I'm then saying, once I buy, how do I now plan my stop losses? How do I plan my targets? Because all those factors have to be known ahead of time, otherwise you're gambling. If you don't know your entry, your stop loss, and your price target, you're gambling. You're playing with hope. If you have those three variables, you know your risk and you know your reward. And from there, we can start to craft out a better trading plan. Now, you don't have to answer, because I'm sure some of you probably aren't doing this. A lot of you are saying, well, I got my entry, and yeah, I pick my stop losses sometimes, but they're manual. You're putting yourself at risk, right? Because now you know how much you're going to lose, potentially, because it's manual, but you're not paying attention to how much you could potentially gain. And if that ratio is skewed or out of whack, the odds are you'll probably lose money over time. So we want to always write those three things down. That leads into the other part here, which again is paramount, risk management. How much am I willing to risk? How much am I willing to lose? And when I talk about this, guys, I'm talking about how much you're willing to risk per trade, per day, per month, per week, per year. All of those are like hurdles for a racer, right? You know and can gauge yourself by, are you meeting these goals? And I say meeting. If you're losing, that shouldn't be like a positive thing. Are you achieving these stop points? If you are risking $500 per trade and you find yourself being stopped out almost every trade you make, you got to stop and reevaluate, right? And Big Eb says, I have a completely different plan for trading versus investing, 100%, right? There's different tactics and strategies for trading a 5-minute chart versus trading a weekly or a monthly chart. Absolutely. But the plan is in place, right? That makes me feel good, Big Eb. You absolutely should have different plans for each style. Like I have them for each account. And not necessarily a full written plan for each account, but I know in this one account, for example, I shared with you guys the 1% portfolio tactic. In that account, I have a very specific set of rules of what I can do, what I can invest in. In my short-term day trading fund account, I'm much more open with what I can do. In my longer-term portfolios, there's rules in there as well that are slightly different, but help steer that portfolio to the ultimate goal. So yes, different plans are great. And then I think, I put on here risk management. There's one piece I didn't put in here, which is like reevaluating. I think once a year, everybody should reevaluate their trading plan. I don't care how good or bad you are. If you're bad, you need to be reevaluating more frequently. But if you find, this year, let's say the market's up 24%. I think S&P is up roughly 24% as it closed today. Uh-oh, what did I say? Uh-oh, what did I do? Oh, okay, you guys are talking about a movie. Who got me? I was worried. No conflict in here, guys. Let's keep it simple. Damn, I lost my track. Anyway, the reevaluation part is important because there's so many things that change, not only in the market, but also with you, and your plan may change. I don't change mine too much now. It's pretty concrete at this point. But in the early days, I had to do a lot of revision, and I would say I'd have a learning lesson and go, man, I need to now incorporate that into my trading. That has to be changed, just because I want to make sure I don't make that mistake again. And most of my my risk management rules come from significant losses, right? When you lose $100,000 on a trade, you want to learn from that and make sure you don't do that one again. Let's see, and then I put on here discipline. So this is a pretty important one, I think, from a success standpoint. If you go back and look at the Turtles, which is Richard Dennis and Bill Eckhart, one of the more famous investing groups in the history of financial markets, their whole thing, in my opinion, it wasn't really about the strategy per se. It was really more about, are you following the rules? If they say to do this, then you do this. If they say to do this, you're going to do this. And you have to do that. And if you didn't follow those rules, they would cut your buying power for those traders, right? So for me, the discipline side, the ability for you to say, here's my set of rules. Here's 5 rules I have to follow. Then you follow those rules on every single trade, whether you're trading a 1-minute tick chart or you're trading a monthly chart. You have to follow those rules. And if you find you're breaking those rules all the time, you got to know you have a problem. And hopefully you are wise enough to be introspective and say, I'm an idiot. I broke my trading rules again. I got to stop this. And you can probably calculate how much that lack of discipline has cost you. Well, it's not about reevaluating, Tony. I think it's more about just saying, I put this together thinking it's about growth. It's about progress. It's about improvement, and we can all improve. I can improve. I'm improving on a daily basis. I'm trying to anyway. I might take a couple steps back every now and again, but for the most part, I'm trying to improve. All right, so that brings me to the last one. And this one, I got to give a shout out to a gentleman who sent in this question. This is from Dan. He says, I looked at my watch list this morning and couldn't find a thing to trade. Because of Friday, I think at 9:05 in the morning, all my supply and demand zones are not good. You always said, don't force a trade. I felt it better to do nothing today than force a trade and maybe lose big like I have done in the past. I'm practicing patience, which is hard for me to do, but I'm going to wait and see what the market offers me over the next few days. I'm up for the year over 40%. I hate to lose it in the last month, which leads me to number 4 is patience. And props out there to Dan, because I think that's you're doing great. If the S&P, and let's see, I'll bring it up here for you guys. Let's go SPY. And I marked it out. This is since the beginning of the year, this red line. That's what the market has done so far this year. And if he's up 40%, and this market right now is only up 23.8%, you have an alpha of roughly 16%. You're beating the market by 16%. That is awesome, right? Your goal, one of the things in my trading plan, by the way, guys, is as far as goals, it's to beat the market. So if the market's up 23%, I want to have 24%, right? I don't ever want to be less than the market. That to me would be failing. Even, when the market, let's say the market is down 10%, well, if my portfolio is only down 5, that's beating the market. Even though I'm negative for the year, that would still be positive for me because I'm beating the S&P. And when I say market, I'm using the S&P as my guideline. So patience is one of the most challenging things. And there's a really, it's a somewhat crude joke, so I'll try to make it PG, but it's a joke that's kind of gone around in the trading world because it makes sense. So there's an old bull and a young bull standing on the top of a hill. And the young bull's, prancing around. He's all excited. He looks down this field, and there's just dozens of cows. And the young bull's like, "Oh man, I'm gonna run down there, and I'm gonna have that one. And no, I'm gonna run down there, and I'm gonna have that cow. Oh no, I'm gonna have that one." And the old bull looks over at the young one and goes, "Dude, you need to relax. You can run down there and have that cow because I'm gonna walk down there, and I'm gonna have them all." And to me, from a trading perspective, it is a great analogy or a great parallel, or I don't know what you want, parable? I don't know what the term might be. But it's like if you take your time and let the trades come to you, you'll probably have far greater success as well as being more selective in the process, and you'll do better over time. So, Dan, love it. I love the fact that you shared that with us. I appreciate that. I'm glad you're having a great year. You're doing the right thing. By sitting it out and waiting for markets to come to you, the only thing that you're losing is potential opportunity, but you're not losing your monetary base, which is what your goal is for your trading and investing, right? Your goal is to make money in your account. So by sitting on the sidelines, there's no risk to you. That's awesome. Now, of course, you do have days like today where all of a sudden the market soared. I mean, the NASDAQ was up over 2%, or was it 2? It was spiky, 2.26% gain. Oh, well, so what? You missed it. You missed that piece. But you're not putting your capital at risk for the long haul, which to me is the most important part there. It's when I'm having a year like that where you're beating the market and you've got a significant alpha, I actually start to taper off and I trade less shares, less big, if you will, for the last month or so, right? Holidays are thinly traded. That's part of the reason we saw that huge move on the half day on Friday, because thin market. No one was really there, so it was easy for markets to move a lot. So good, congrats. Patience is a virtue, they say. We've heard that a million times. Sitting back and letting that market come to you is probably one of the toughest things to do. If you force trades, they're generally going to be losers. So put your levels, set your numbers out there, and go for it. I'll show you. Well, since we're talking about that, I had SPY. So I did sell a bunch of puts on Friday, or on that half day, which is great. So I'm not SLY. So here's one of the ones I sold. SLV, excuse me. So there's silver. I actually sold the 21s, and this is actually a really good deal. So I sold the 21s on Friday, and basically for 1 week. So I sold them last Friday. I sold 1 week expirations, and it was 1.9% rate of return for 1 week on silver. And I'm already wanting to own silver at 21. So if silver gets to 21, I'll be happy owning it. I think long term, I'm fine owning silver. But if it doesn't, I'm going to make about 1.9% for 7 days worth of trading. So I think, Dan, this is something you could do as well. You mentioned that your supply and demand zones are all bad. Well, that's not entirely true, is it? What might be is your supply and demand zones that you've already drawn out are bad. But what happens is it's gone through those levels of demand, right? Because that sell-off we saw last week. When it goes through there, do we not have further demand zones? Yeah, there's going to be a ton of them there. So, if we look out here, and I'll just do it rough. Let's go to SPY. All right, so look at your S&P 500 here. And, maybe this Friday action broke through some of your demand zones, however you want to draw them. You could start to map out different demand zones and make potential buys at those points. there's a lot of demand zones on every chart. So there's gold, you got them on silver, NASDAQ with one hell of a bounce today. Conveniently, coming right into a demand zone on Friday. I don't know if you guys caught that one, but it came right into this last big move up. Perfect time to buy it. So you could be selling options, which is one thing I really enjoy doing. If I want to own something, but I'm a little sketchy, I don't quite want to take the risk, well, I could sell some options, collect some premium, do that maybe on a weekly or a monthly basis, and generating a little bit more income without putting necessarily as much exposure on my portfolio by buying outright. So that's one thing you might want to play with, Dan, a little bit. But yeah, I agree with the crew here. 40%, that's a great year, man. That's a really good year. The key is to do that consistently, right? I'm hoping, Dan, that this year, sometime that last week of the trading year where you shouldn't trade the markets anyway, just stay away the last year. Use that as a week of recollection and go back through your portfolio and say, okay, what were the best things that happened? And of course, your mind's going to remember the big money gaining trades, but was that the best trade? Just because you made the most money, that doesn't make it the best trade, right? Evaluate what was the best trades you've made. What were the worst trades you made that year, and what can you do to improve upon them, right? It's about evaluation. I remember in school, I had to sit with the counselor once a year and say, okay, well, where do you want to do? How are you getting there? What are you doing to achieve your goals? Well, unfortunately, there's nobody there that's going to force you to do that. We're adults now, so you have to do it yourself. Go through there and evaluate it. I know that with OTA, there's GPS sessions and things like that where, there's a bunch of interactivity. As they were talking about, there's the mastermind community. Though you can go in there and get help from those guys as well and share information. I think it's important to look at improving ourselves all the time. So thanks for sharing that one, Dan. You actually were one of the ones that sparked the conversation today and steered the discussion. Patience to me is critical, right? It is paramount. So if we run it down to the 4 things: education, know the asset class, not only that you want to trade, but let's figure out what the relationships are between the other asset classes and how might I be able to use or leverage the impact of another asset class on what I'm trading. So if I'm trading, metal stocks, I'm trading, Freeport-McMoRan. Okay, well, let me go out there and check what's going on with the price of commodities and copper. What's going on with the price of the dollar, which could impact those commodity prices. What's going on in those countries? Now we're taking a step outside that realm and saying, let's go even geopolitical. So if I'm looking at some mining operation out of, Sao Paulo, and they're having political turmoil, well, that might create what? Supply disruptions. And all of a sudden now the price of copper could start to rise. So learn how this machine functions. As I was talking about with Chris Collins' analogy of motors, Understand each piece of that motor, because when it runs properly, it's a fine-tuned machine. If one piece is screwed up and you don't know which piece it is, it's going to be impossible to fix it. So learn about the markets. Number 2 is know thyself. Be introspective, be honest. We all want to pat ourselves in the back and say how great we are. Your trading results will tell you how great you are. And if we can go back through and evaluate that, know what our strengths and weaknesses are, refine those and make them better, then we'll be better in the long run. The easiest part of all this, I think, is the trade plan. And it's basically just setting up, here's my rules. This is my trading Bible, if you will, right? It's my code for success in the financial markets. Now, it's not going to work all the time. You might be more of a momentum trader, which is doing great when markets are trending strong. And then all of a sudden we go into like the Russell 2000's done for a year, which is just chopped sideways. Well, I have to reevaluate. I need to reinvent myself or change my strategy to capitalize on that market. So plan from the business plan perspective all the way down to here's each trade I'm going to make. How am I going to approach that? And lastly, talk about patience, right? Patience, making sure that you let things come to you. Don't force trades. Don't push something because you just want to be involved. I got to be involved in the markets. You know what? If you're out of the markets for a week or two, it's okay. There's always another opportunity. The higher probability is if you force a trade, it's going to go against you. You'll end up losing. It's just the nature of the beast. Some of the best trades I've ever had were almost by accident, where I was like, okay, I'll set this one up, and all of a sudden it hit me and did everything I thought I was going to do. I was like, wow, kind of didn't expect that to happen like that, but I had the plan in place, and I just followed the plan. Done. Great trades. All right, so that in a nutshell, guys, would be my steps to success. Thanks, Delphine. Glad you enjoyed it. That would be my steps to success. I'm sure we could incorporate others, but again, I kind of put that together rather quickly based off of Dan's comments about patience. I think that a broader discussion of success and how to succeed in the markets, given the fact that 93% of people that are involved in financial markets fail. That trade. That was a Bear Stearns report from like 2001, 2000, somewhere in there, that such a huge number of people fail at trading. And it's easy. If you go out to anybody you know in financial markets and you say, let me ask you a question. Do you have a trading plan? And they go, oh, yeah, I have plans to make money. No. In your trading plan, I want to know what's your business? Why are you doing this? How you're going to do it? How do you define your entries, stop loss, price targets? How much are you risking per day, per month, per week, per year? What strategies are you using? Are you using moving average crossovers? Are you using supply and demand? Are we using a stochastics, RSI mix? How are you mapping out all of that? And the vast majority of people will say, oh, I don't have all that. I don't need all that stuff. Okay. How's your trading going? Are you floundering there? Are you kind of going sideways, maybe a little bit down? Get all those pieces in place. You'll probably see that needle start to tick to the upside and consistency starts to work its way into your trading simply because you've covered all the variables. So 93% of people, it was an alarming statistic for me when I got started in trading, but with work, with effort, with discipline, and some hard work, and certainly patience, we can do much, much better than that. All right. Yeah, that was it. Nailed it. Cool. Let's see. Any other questions? Let me see if I got anything else here. Is there a trade plan template where all the items described? No. It is actually, Alan, there is one. It's in the trade plan class, but I don't have one. I can't give that out because that'd be Online Trading Academy's property. So I don't have that information. But you can obviously build yours. There's probably some you could find online. But there you go. Having written trading plan overcame most of my emotional trading mistakes. Like I say, you'll always keep having emotional mistakes. It's just the nature of the beast. All right. Well, you guys got any other last-minute questions for me? Type them on in. Always good to get some feedback or touch on something real quick. I'm pretty much done for today anyway. So, economic calendar. I even took a picture of everything that was going on today, but I forgot to upload it and put it in the thing. So, here is what we have cooking for tomorrow. And it's a good one. We had existing home sales numbers today were off the charts. It was incredible. And tomorrow, here you can see pretty much the U.S. It's a big day for the U.S. You got home price index, Case-Shiller Composite 20 home price index. So we got housing data. And then notice you got Fed Chair Powell testifying. You got Yellen testifying. Williams and Clarita testifying. It's a big day for the U.S. So, I'm expecting there to be some good movement based off of the housing data, which they're expecting the housing data to slow down. Judging by the number that came out today with existing home sales, it might actually be higher than this, which would be crazy. We got above 20%. That's just nuts with regards to home prices. All right, so let me see if I can find this for you. And I'll do it live just so we can do it this way. Go to YouTube. All right. And I'm pretty sure, yeah, the housing numbers were good today. Let's see what happens out there tomorrow. Hey, look at this. I wonder if I could watch my show and just create an infinite loop. So let's go to TraderMerlin. And we'll go here to search. And wow. I could have sworn we did one all about a Vega bomb with Corey Lane. Quarantine, Brandon Waddell, spreads. Let me look into that. I'll see if I can find it for you, Lisa, for tomorrow. I'm making a note to myself so I can dig and not, not waste our time with that one. But it's there somewhere. I got to dig for it. I'm not sure exactly where it was, but I know. Remember, we did a Vega bomb. It was on the. It was back when GM's GameStop had its huge spike up because that was a big Vega bomb incident as well. All right, well, that's going to do it for me for today, everybody. Hope you enjoyed that one. All right, yeah, I'll bring them on the show. Why not? I try. I just don't like bugging people to bring them on the show, and I feel like I'm bugging Corey and these other guys that come on the show, but who knows? I'll see if I can get some hosts. You guys are probably getting tired of watching me do solo shows anyway. All right, that's going to do it for me. Again, if you guys have comments, questions, feedback, things you would like us to talk about or as a group talk about on the show, you can email me at TraderMerlin@gmail.com. That's the easiest way to get a hold of me, and thank you guys for all the messages over the weekends. That was awesome. I'll bring it up today. Yeah, I know it's there. I just got to find the archive. I have it here somewhere because I remember we did a long in-depth on what exactly was a Vega bomb. It's a lot of people don't quite understand it. Gary, your Vega bomb is probably a lot cheaper than the one that Lisa had because a Vega bomb going against you can be brutal. All right, everybody, that's going to do it for me. Thank you guys so much. Hope you enjoyed it. If you know someone who's new to trading or struggling, you know what? Forward this on to them. I think sometimes tough love or just straight shooting is a great resource to help people. By the way, a shout out to Miles Davis. Thank you for the contribution. I saw that one flow through, but my brain was on a roll. I couldn't stop. So, Miles, thank you very much for that donation. For the rest of you guys, thank you so much for your participation. Email me at TraderMerlin@gmail.com with topics, and I will see you all mañana. Take care.